Hi there, everybody. This is the Women's Eye podcast, and I'm your host, Stacey Galandi. The Women's Eye is here to help you build your money power with financial planner Catherine Scrivano. Happy birthday or belated birthday, Catherine.
Same to you.
I
We're
know
almost twins.
this is our big birthday month, right?
Right.
Now, obviously, when I say big, I mean mine was a biggie, which means I'm getting that much closer to collecting Social Security. So, Catherine is here to help me and those of you tuned in to learn the simple strategies to maximize Social Security benefits over your lifetime. But first, this episode of our Building Money Power series is brought to you by CASCO Financial Group in Phoenix, Arizona. CASCO's president, Catherine Scrivano, started her business to help people create the financial strength to achieve their dreams. So, Catherine, once again, it's great to be with you. I've got my smart glasses on today for this topic. I want to know, obviously, this is something that Social Security is a real hot button topic right now.
There is.
But why is it important for people to know what it is? And because this really could affect your future from this point forward, right?
There's no question about it. We have 15, 20 minutes to talk today. I promise you, if we wanted to do a very thorough dive into Social Security and all of the issues around claiming decisions, we need more like 3 hours. It's that
Yes.
complicated and convoluted.
Which means people really need to do their homework,
They do.
obviously. And it's not
They
that
do.
complicated, really. It's just knowing all the options, knowing
There,
all the facts. Yeah.
Exactly. There are a lot of choices to make. And if your goal is to maximize Social Security, whether that's a matter of how much you got to collect over your lifetime or your monthly income now, you really have to be thoughtful and strategic about it, understand what all the choices are.
Yeah. So some quick facts to know that if people don't understand, but this is basically free income, right? I mean,
Well, I don't
this
know
is
about free because a portion of it is a return of the money that you contributed. Another portion is a return of the money that your employers, probably over a number of years, have contributed. So I don't, in my definition of free is not the same because you're getting money back. After you've used up the money you contributed and your employers contributed, then yes, you're getting free money because the source is people who are still contributing.
gotcha, which is kind of like at like 4 years ish, I guess, in
It
terms of when you start getting that free income, right?
you are so far ahead. Most people, well, I don't know if that's fair, but many people I've heard over the years say, "Oh, I just can't live long enough to collect all of the money that I put in." The average really is between 4 and 5 years that you're actually drawing out the money that you've contributed over the years because employers match our contributions. It's the same. So another 4 or 5 years. So let's say the first 10 years are directly attributable to your contributions or your labor in working for somebody. If you live 10 years beyond collecting benefits when you start, yeah, you're into somebody else's pocket.
Which is that's kind of nice. Um,
Yeah,
Social Security is
thanks to your kids.
yeah, right, exactly. But obviously Social Security has been in the news of late because let me get this straight. For 2026, we're getting a 2.8% increase. And that's based on we call it COLA, or it's called
Mhm.
COLA, which is the cost of living uh, uh,
With the COLA is the cost of living adjustment. So
adjustment. Thank you.
if there's going to be an increase every year, it's based on certain inflation indexes. And
Yeah.
this is very controversial. The indexes change from time to time. There is controversy about what's included in the index. Does the average retiree spend their money on the things that are in the index? And
Wow.
again, that's a whole different. We can do another half hour on that and still not
Yeah.
have a conclusion because it is what it is. For 2026, the
Yeah.
cost of living increase is going to be 2.8.
And it's interesting too, because, yes, we get more money, but that's because there's more inflation, which could mean
Hmm.
you're actually
Right.
paying more tax on the Social Security, or the money that's going out, or
But
being
yeah,
contributed. Yeah.
taxes is a completely different issue. But as I talk to retirees who inevitably bemoan the cost of living increase is never enough,
Aha.
because they feel, and legitimate experiences, it's very unlikely that if you buy the same thing January 1st and then repeat your purchase January or December 31st in the same year, I'm not sure that the increase is going to be only 2.8%. Depends on what that thing is, obviously, but
Right. But also too,
for
it's like a little bit of controversial, as you said, but it's like inflation's at 3%. So it's
yeah,
the
that's right.
increase isn't quite up to inflation. But obviously, because this is, we're talking about how this affects women. Um, how do women play into Social Security? I mean, it's
Well,
a,
yeah, statistically, women have probably during their working lifetime not earned as much as their male counterparts. So if we're going to compare, that's a focus on women. Also, the likelihood in any family that somebody is going to take time out from their career to take care of children, to take care of family, to take care of their spouse, etc. Any number of reasons that a career might be interrupted tends to fall on the females. And all of those earnings that we're not booking into our Social Security account are going to affect our benefit. So it really is very much a woman's issue. Also, survivor benefits. I know we'll talk a little bit more in detail about that, but if your benefit is tied to a spouse, um, you need to know what decisions that spouse has made around their benefits because it would affect you.
exactly. And because I think you had given me some statistics or percentages. 56% of all Social Security beneficiaries age 62 and older, right? And about 66% of all beneficiaries are age 85 and older. And that's, whether you're married, single, divorced, all of it.
Right.
But also too, that there's this pay gap, that
Mhm.
there's still this differential between what women make and what men make,
And we live longer. So
and
we
yes.
have made less money and has to last longer. So Social Security is one of the very common sources of income for people in retirement, for women who are living longer in retirement. So I just keep preaching it's so important that women take this seriously, look at their options, understand their choices, and make strategic decisions around collecting Social Security, just like I want them to make strategic decisions around all parts of financial life. But Social Security is kind of a thing of its own. And because it can be quite complicated,
Yeah.
it's
Well,
worth the time.
exactly. And obviously, I mentioned earlier I had a big birthday. I'll be transparent. I'm 60. So obviously this is the time to I need to really concentrate and focus on what I'm going to do. So what do I ask to determine the benefits and what is going to be the best path for me?
Well, there's a few key terms that you need to be aware of or be familiar with. The first is what is your full retirement age? And that's
Okay.
defined by Social Security. This is the age at which you can collect your maximum benefit based on your age and earnings history. It also allows you to claim and draw Social Security even if you continue to work. If you file for Social Security before your full retirement age, you're going to get a reduced benefit. And that's forever. So you've locked in that reduced benefit. So knowing your full retirement age, I happen to know that your full retirement age is 66. So
Mm-hmm.
that's the earliest that you can claim and get your full benefit. Now you can delay your benefit. You don't have to take it at 66. You can wait forever. You can never claim if you choose. There's an incentive every year that you don't claim between your full retirement age and age 70. And that's an 8% increase in your benefit.
Oh, wow.
After age 70, that 8% goes away.
Yeah. In
So
fact, my
for,
husband, I think, yeah, he said he's going to take Social Security when he turns 70
uh-huh,
next year. Yeah.
many people do. My knee-jerk response, I'm asked so often, at what age should I start collecting Social Security? My knee-jerk response is, what are you going to do with the money?
Yeah.
And
Okay.
if you're not going to be paying down debt or using it to invest at a rate that's greater than 8%, or there's a lot of what ifs, but yeah, how are you going to spend the money? Now, for someone who is fully retired, chances are very good that Social Security is going to make up a significant part of their income. And so the answer is right now.
Yeah.
But if you have the opportunity to delay and no reason to take it and spend it in some of the other ways I've described, then yeah, it's quite an incentive, but it's just not available to you after age 70.
Now you mentioned the full retirement age, FRA, as
Yeah, there
we
you
call it,
go.
FRA. The other one is PIA, which
Hmm.
is the primary insurance amount.
Amount,
So yeah,
right.
what if you
So
can explain what that
yeah,
is?
your benefit to qualify to be eligible for a Social Security benefit, to have a record of your own, you have to have worked 40 quarters or 10 years. They don't have to be consecutive, but over your working lifetime, you need to have collected those 40 quarters. And then your benefit is going to be based on your highest 35 years cumulative. So we do have some folks, again, the scenario I described earlier, where someone may have taken time out of their career for family care, child rearing, et cetera. And then toward as they get closer to Social Security claiming age, they go just as hard as they can to earn a lot of money, mostly to bring up that PIA, that primary insured amount. So again, looking at these issues well in advance of your intention to claim gives you the opportunities to actually increase your benefit.
Also, too, the things that you need to ask when you're starting to go into this process is like, whether you're married, if you've had previous marriages, because those also factor in too.
Oh, so many. Yeah. Yeah. There's basically benefits based on your own record. You could be entitled to spousal benefits, and that could be a current marriage, a uh, you could have been married to someone and divorced and still be eligible for their benefit
Huh.
if you were married more than 10 years.
Okay.
And we actually sadly have a client in our practice. She and her husband divorced, and it was the most amiable, amicable divorce you've ever heard. I mean, these guys parted great
Very mature
friends.
about it.
They were
Yeah.
super. They were a great example. However, they divorced after 9 years and 9 months of marriage, or something. It
Oh,
was just short of 10 years. And in her case, it would have made a difference had they been able to just hang out another couple of months. She
yeah.
would have been eligible to collect on his uh, account, which would have been a considerably higher benefit for her.
For her, is
Also, another category is survivor benefits. So
hmm
going back to the person that I was just talking about, her ex-husband did pass away, and it was a shame that she wasn't eligible to collect his considerably higher benefit once he was gone. So divorced spouse, surviving spouse, you can have multiple marriages as long as they're each 10 years in duration.
if you've been
Uh,
busy.
yeah, we when we do workshops, a lot of times we mention a lot of celebrities who've had multiple marriages, and they probably don't need the money from Social Security, but it's kind of fun to think about, where they would have collected the most from their
Exactly. Well, and what's
prior.
interesting to note too is that you maybe have different options as to where you can get your benefits, but you can only collect from one.
Only to collect from one. Very
Okay.
good. Yeah, that's exactly right. And the Social Security Administration, in my experience, and I've never heard any different from any of the claimants, Social Security, working with Social Security, they're not trying to hide the ball and see how much money they can keep. You are entitled to the largest benefit for which you qualify. The challenge is Social Security folks tend to be very overworked.
Oh,
They kind of tend to just answer the question that's asked instead of oh, by the way. So you have to have enough information to at least ask the right questions. This is a case I think that could be made in for working with a financial planner who can
planner.
help you explore options and everything. But if you're a do-it-yourselfer, God bless you, go for it. But make sure you know what questions to ask. What are these scenarios and what would bring me the highest benefit?
Because that's what it's all about. You've been putting into the system all these
Yeah,
years.
yep.
So the first steps, maybe we could sum those up. Obviously, you learn how to calculate, you estimate your benefit. A lot of people don't realize you can literally go on the Social Security Administration's website, right? I mean,
That's the place to do everything else. You're going to go on ssa.gov, open an account, and they're going to ask you some identifying questions. And it's a little spooky that they ask you about addresses where you haven't lived for many years, or even an automobile that you owned, or a loan on an automobile that you owned 10 years ago. But they managed to identify that it's really you. And then once that account is open at Social Security, you can look at your estimated benefits. You can also look at your earnings history. And that's your opportunity, if there is one, to increase that 35 highest years. You can bump that account. And you can also check that for accuracy,
oh,
because the time
I
to find out that an employer incorrectly reported earnings 15 years ago, the sooner you get on that, the better. When you're
and
trying to apply and waiting for your benefit, you don't want to have to be going back through old tax returns and saying, no, I
so it's
really made this.
yeah, like for me, I'm talking about this because of my age, but people in their like 30s and 40s, what should they be
They,
keeping this in mind
yeah,
too? And
yeah. Have a look once a year when you're doing your general annual review that you and I talk about so often. It's not a bad idea to look at your Social Security earnings and benefits report and make sure that everything is accurate.
yeah, I think that's fantastic too. But that this is such an easy resource. Plus, when you'll get emails, and so I used to get those little things in the mail all the time too.
Hmm.
My little pamphlet too. But and then of course you're learning, not only learning how the amount or calculate the amount, but also learning when to apply. And then of course you've mentioned several of the types of benefits
Hmm.
that are eligible, that you could be eligible for too. So
You're on that earnings and benefits statement. The only thing they're going to show is your record.
okay.
So you need to know if you have prior marriages, or yeah, perhaps you are a widow. If you've been married more than a year, you can claim on your late spouse's record. Again, what you want to do is just look at all of the options, determine which brings you the most money, and that's the category or the status that you want to claim when you claim.
Yeah, of course. But before we get into how long will Social Security last? Because I know a lot of people are worried about that. But what is some of the misinformation that's out there
Oh my
regarding
goodness.
Social Security? Is there? Okay, there's a lot.
Oh, it's so much. And that's why I feel like what you and I are doing right now is really important, to get folks to look at Social Security site, work with your financial planner, get accurate information, because this topic is such a source of pants on fire kind of information that's
Really?
out there.
Wow,
Oh
okay.
heavens, yeah. So don't listen to your well-meaning brother-in-law. Go to the Social Security site and get the facts. The current state of Social Security is there are not enough people putting into it at a rate that is sustainable for the people who are taking out. It can't be maintained at the rate that it is past 2034. And
Oh
that
boy.
date gets changed all the time.
As
It's
changed as in keeps moving closer and
yeah.
closer.
Well, and
Uh,
actually I've seen delay.
Okay.
But the Social Security does their annual report and they say this is the state of our bucket of money. And as of the last report, it said as of 2034, we won't be able to pay out 100% of benefits. We would have to, the best we would be able to do is 81% of your benefit. So if you're getting $1,000 a month from Social Security, now you're going to get $810 if that scenario were to play out exactly that way.
Right
Until
now,
we get
people are
closer,
getting the full amount right now, right? 2025.
absolutely.
Okay.
Yeah, Social Security is fully funded through 2034. And then if no changes are made, then benefits will be reduced. So that's something as you're working on your financial plan and you're thinking about retirement, one of the what if scenarios that you run should probably be what if we start getting a reduced Social Security benefit starting in 2034? How does that impact our plan? Doesn't mean it's going to happen. I promise you it's going to change. I don't know to what.
To what and when?
Yeah,
Yeah.
hopefully, that there are things that could be done that are being proposed. I think that Congress, as you and I are talking right now, Congress is the government is shut down. They're not talking about anything, much less Social Security. The last time we got this close to a deficiency in Social Security was 1983, and Congress made changes something like 3 or 4 months before Social Security would have had to reduce benefits.
Oh
So
gosh.
they have a track record of waiting till the last
Last
minute and
minute.
making us
Exactly.
all crazy in the meantime.
Well, what are ways that Social Security could, if they once they get back, that they could start really focusing on maybe to improve the system? What do you
What
see as
there's a
like the top ways to do
well,
that?
there's so many ways it could be done and so many things that are being considered. One is to push the full retirement age out. So
Hmm.
instead of, for most of us, or I think the end right now is age 67, maybe push that out to 68 or 69. The fact is that people are working longer, we're healthier, et cetera. But think of the impact of someone who does hard manual labor
Yeah.
being told now you have to add a couple more years. I mean, if I have to sit at a desk for 2 more years, I'm probably going to be okay. But if I were digging ditches, that's a huge impact. So
Yeah.
that's one of the conversations. Another is to increase the contribution rate, the amount that you and I put in and that our employer puts in, that could go up. There is a limit on how much you pay, how much of your earnings goes into Social Security. And I hate to be so cynical, but frankly, the people making decisions are the high earners. So I don't know how motivated to raise that cap would be. But right now, any amount that you make over $176,000 is not subject to Social Security tax. So what would be the effect of raising that to $196,000? So those kinds of things are you know being considered, maybe a combination of those three plus a few that I haven't even mentioned. It's a real convoluted problem, and it's
Oh,
going to take
yeah.
some courage on the part of Congress because it's going, whatever the decision is, it's going to be unpopular. You're going to have to pay more, you're going to have to work longer, some combination of those things. Somebody's going to be cranky.
Yeah, and but it's just that's why it's just so important now. Maybe we've been coasting for a long time, but now it's just really at the forefront that we need to be very aware of what aware of what's out there and what we need to do. But if you were to give us like I don't know the top three tips to know and maybe the what to not listen to when it comes to Social Security
Well, don't
benefits.
listen to anything but the Women's Eye podcast, and we want nothing but accurate, vetted information. Um, if you are inclined, this is a place where a financial planner or a financial professional can really earn their keep. And I know I'm hardly objective about my profession, but if you're getting close to making these decisions And if it's as an important part of your retirement lifestyle as it is for most people, it's probably not a bad idea. Pay somebody a couple bucks and have them help you figure it out. Okay, so I'm off that soapbox. The second is please go to the Social Security website, ssa.gov,
Yep.
create an account, and this is regardless of your age, but especially important if you're within a few years of filing, and look at your earnings and benefit estimates. Make sure that your reported earnings are accurate more than anything. And then just start getting a reasonable expectation about the choices that you'll have in front of you and implementing those into your financial plan so you can make good decisions. And please remember my knee-jerk reaction is, how are you going to spend the money? Because there's great potential that you'll be subject to income taxes on your benefit. I know that the recent bill has been touted as no tax on Social Security. That's not accurate. There is
Okay.
a
Interesting.
credit for seniors that for many will result in no tax on Social Security, but there are many who are, it's not going to make a difference for them. It might be less tax on Social Security, but the idea that Social Security comes to you as a tax-free benefit is not accurate. So again, what are you going to do with the money? Part of your calculation is, am I going to pay tax on these dollars, or is it going to cause other income to be taxable? And that can dilute the effectiveness of having filed.
Wow. It's so
It's a
much to
lot.
take in, but really, if you just sit down, break it down, it's comprehensive. And you have this great resource, obviously you and the website,
Yeah.
for Social Security Administration. So, but
Don't
yeah,
listen
but
to your well-meaning brother-in-law. He doesn't know
no,
what he's talking about. God love him.
I know it's just like, you know what? You're smart, but I'm gonna go with the expert. So, well, this will be good. Well, I know who to contact when I start to figure out but not till 66 at the least at the moment for me. So,
Okay,
I
okay.
got a few years, right?
But it doesn't hurt a bit to start thinking about it now and devising your strategies.
Yep,
And can I
absolutely.
mention one other thing? As
Yeah.
I've mentioned, being able to collect on the account of a former spouse, you're not reducing their benefit. They don't even have to know. I
Okay.
should have mentioned that earlier, because sometimes that's an objection people have. They say, almost as if they have to call and ask permission of the former
And
spouse.
they don't,
They don't.
because yeah, you're
Yeah,
eligible, and if that's what you want to do, you can take advantage. It's
exactly.
not
And
affecting the other person
it
at
doesn't
all, right?
affect their benefit at all. So yeah, that's.
Wonderful.
But there's so much more. We've hit on the high points and the common points, but there are so many other things to consider and options and choices. And it's important that you make the right one, because you're stuck with it.
Yeah, exactly. Like, you won't outlive this, but once you make that decision, it's
Yeah.
in writing, it's done. It's
Yeah.
in stone. So
Well,
just make
I always
sure.
tell clients, please don't tell me what you've done. Tell me what you're thinking of doing. And
Okay.
maybe I will weigh in with some information that you didn't have before. Maybe I'll say, oh my gosh, I never would have thought of that. This is the best idea ever. But, you know, think about it. Don't just impulsively do
Gotcha. And I just wrote that down. It's it's for myself
it.
too. So, well, Catherine, thank you so much for taking. Well, we might have to do a part two on Social
we
Security,
might, we might.
depending on what's happening in the
But
next
yeah,
few months. But thanks so much for all your fantastic tips, and obviously helping us feel more secure about our Social Security benefits. To learn more about Catherine Scrivano and her financial tips, just go to thewomenseye.com. And there you'll also find our books, 20 Women Changemakers. Just shop wherever you buy books, and changemakersbook.com, and 20 Women Storytellers at womenstorytellersbook.com. Don't forget, just subscribe to our newsletter and YouTube channel. Again, thank you, Catherine, so much for your help. I always feel so much smarter after these conversations. So,
great seeing you. Look forward to the next time.
and we'll keep celebrating our birthdays. The whole month. And thank you to all of you for tuning in to the Women's Eye podcast. Just keep building your money power. I'm Stacey Galandi. Remember, it's the world as we see it.